Look, I need to show you something that's happening right now in the silver market, something that most people aren't paying attention to. And if you miss this window, you're going to be kicking yourself 6 months from now. Silver just hit $64 an ounce. Let me say that again. $64. And here's what nobody's talking about. This isn't a bubble. This isn't speculation. This is a supply crisis that's been building for 5 straight years, and we're now entering year number 5 of consecutive deficits. The Silver Institute just released their 2025 World Silver Survey, and the numbers are staggering. The market is short 148.9 million ounces this year alone. That's 4,632 metric tons of silver that the world needs but cannot produce. And this isn't new. This has been happening since 2020. Every single year, we've consumed more silver than we've mined. Think about that for a second. 5 years of eating into stockpiles. 5 years of drawing down inventories. 5 years of the market screaming at us that there's not enough silver to go around. And what happens when you have 5 years of deficits in any commodity? Eventually, you run out of buffer. Eventually, the price has to adjust to reality. But here's where it gets really interesting. Industrial demand for silver isn't slowing down. It's accelerating. Every solar panel needs silver. Every electric vehicle needs silver. Every smartphone, every computer, every piece of electronics with an on and off switch requires silver. We're not talking about jewelry here. We're not talking about collectibles. We're talking about the backbone of modern technology. And the solar industry alone is consuming silver at a rate that would have been unthinkable 10 years ago. China is building solar farms the size of small countries. The United States just passed the Inflation Reduction Act, pumping hundreds of billions into green energy. Europe is racing to energy independence. Every single one of these initiatives requires massive amounts of silver. Now, you might be thinking, okay, but can't they just mine more? Great question. And here's the brutal answer. No, they can't. Not quickly anyway. It takes 7 to 10 years to bring a new silver mine online. 7 to 10 years from discovery to production. And most silver isn't even mined as a primary product. About 70% of silver comes as a byproduct of mining other metals like copper, lead, and zinc. So when copper prices are low, or when base metal production slows down, silver production automatically decreases. The miners can't just flip a switch and produce more silver. It doesn't work that way. And right now, we're seeing base metal production constraints across the board. Let me paint you a picture of what's happening in the London silver market right now. This is where the big institutional players trade. This is where the price discovery happens for the entire world. And according to recent reports, the London market is experiencing material trading and delivery disruptions. Physical silver is becoming harder to source. The spreads between paper silver and physical silver are widening. You know what that means? It means the paper market, the futures market, where most of the price action happens, is starting to disconnect from physical reality. And when paper markets disconnect from physical markets and commodities, that's when you see explosive price moves. We saw it in nickel in 2022. We saw it in palladium. And we're watching it happen in silver right now. CNBC just ran a piece saying silver hit record highs in 2025 and still has further to run. Think about that headline. Record highs. And the analysis says it's going higher. When was the last time you saw mainstream financial media bullish on a precious metal? They're usually the last ones to the party. But even they can't ignore what's happening anymore. Marketplace did a story on the silver shortage, and they used a phrase that should make your ears perk up. Global demand for silver has been outstripping supply since 2020. Since 2020. That's 5 years of structural deficit, and the price is only now starting to reflect that reality. Here's what most people don't understand about commodity markets. Price doesn't move in a straight line with fundamentals. It can stay disconnected for years. Miners can draw down inventories. Traders can suppress prices through paper contracts. Central banks can manipulate markets. But eventually, physical reality wins. Eventually, you can't paper over a shortage with futures contracts. And we're at that inflection point right now with silver. The inventories are depleted. The COMEX warehouses are at multi-year lows. The London vaults are seeing drawdowns. Shanghai is pulling physical metal out of the West. And industrial users are starting to panic about securing supply. I've been watching this market for 2 decades, and I've never seen a setup quite like this. You've got a supply deficit that's structural, not cyclical. You've got industrial demand that's driven by mega trends like electrification and renewable energy. You've got investment demand starting to wake up as people realize what's happening. And you've got a price that's still, believe it or not, relatively cheap compared to where it needs to go. Some analysts are now talking about $100 silver, not as a pie-in-the-sky prediction, but as a mathematical necessity based on the supply-demand fundamentals. When you're short 150 million ounces a year, and that deficit is growing, and there's no new supply coming online for years, the price has to go high enough to either destroy demand or incentivize massive new production. And we're nowhere near that price yet. Let me give you some historical context. In 1980, silver hit $50 an ounce. Adjusted for inflation, that's about $185 in today's dollars. Now, I'm not saying we're going to 185s, but I am saying that $64 silver, in a world with structural deficits and exploding industrial demand, is not expensive. It's actually still cheap. Back in 2011, silver briefly touched $49. That was driven primarily by investment demand and fears about the financial system after the 2008 crisis. But the fundamentals weren't there. There was no supply shortage. Industrial demand was moderate. It was a speculative run that eventually corrected. This time is different. This time, the fundamentals are screaming shortage. This time, you've got real industrial users competing with investors for limited supply. This time, the deficit isn't going away next year or the year after. It's structural. And here's something that should really get your attention. Central banks around the world are accumulating precious metals at record rates. Not just gold, silver too. They understand what's coming. They understand that when you have $35 trillion in U.S. debt, when you have money printing on a scale never seen in human history, when you have geopolitical tensions rising and the dollar's reserve status being questioned, you need hard assets. The BRICS nations are actively working to reduce dollar dependence. They're settling trade in local currencies. They're accumulating gold and silver. They're building alternative payment systems. And whether you think that's going to succeed or not, the mere attempt is driving demand for precious metals as a hedge against currency instability. Quick aside here, because this is important. If you're sitting on $100,000 or more in retirement accounts, you might want to look into how gold IRAs work. I put together a free guide that covers how to get physical precious metals into your retirement account without tax penalties. It's in the description. Worth checking out if you're thinking about protecting your retirement savings with hard assets. Anyway, back to where this price is headed. The technical picture on silver is incredibly bullish right now. We've broken through major resistance levels. We're seeing higher highs and higher lows. The moving averages are all pointing up. Momentum indicators are strong. And most importantly, we're seeing this happen on increasing volume, which tells you this isn't a fake breakout. This is real buying pressure. But the technicals are just confirming what the fundamentals are already telling us. And the fundamentals are saying we're in the early stages of a major bull market in silver, not a quick spike that reverses. A sustained move higher driven by supply-demand imbalances that can't be fixed quickly. Now, let me address the elephant in the room. Some people are going to say, but what if industrial demand drops? What if we go into a recession? Fair question. And here's the answer. Even if industrial demand drops by 10% or 15%, we're still in a deficit. The shortage is that severe. We'd need industrial demand to collapse by 30% or 40% just to get back to balance. And that's not happening because the electrification trend isn't reversing. The solar build-out isn't stopping. The technology sector isn't going away. In fact, the Silver Institute is projecting that industrial demand will only decline by 2% in 2025 due to economic uncertainty. 2%. That's nothing. That's a rounding error. And we're still looking at a massive deficit even with that slight decline. Here's another angle most people aren't considering. Silver is incredibly cheap relative to gold right now. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been historically out of whack for years. Right now, it's around 40 to 1. Historically, it's been closer to 15 to 1 or 20 to 1. If silver just reverts to its historical relationship with gold, we're looking at much higher prices even if gold stays flat. And gold isn't staying flat. Gold is making new all-time highs. Central banks are buying gold at record rates. Institutional investors are piling into gold ETFs. The gold bull market is well underway. And silver, as gold's little brother, tends to follow gold higher. Except silver moves with more volatility. When gold goes up 20%, silver often goes up 40% or 50%. So you've got the fundamental story of supply deficits. You've got the industrial demand story from electrification and technology. You've got the monetary story of currency debasement and central bank buying. You've got the technical story of a major breakout. And you've got the relative value story versus gold. All of these factors are pointing in the same direction. But here's the critical part, and this is why I'm making this video right now. The window to buy cheap silver is closing. Not next year. Not in 6 months. Right now. Once the mainstream catches on to what's happening, once the investment crowd really piles in, once the industrial users start hoarding because they're worried about supply, the price is going to gap higher. And you won't be able to get in at these levels anymore. I've seen this movie before in other commodities. I watched uranium go from $20 to $140 when the supply-demand fundamentals finally caught up with price. I watched lithium explode when the EV revolution became real. I watched rare earth elements skyrocket when people realized China controlled the supply. And in every case, there was a window where the smart money got in early, and then there was everyone else who chased it higher. Right now, with silver at $64, we're still in that early window. Yes, it's up significantly from where it was a year ago. But compared to where it's going based on the fundamentals, it's still cheap. The analysts talking about $100 silver aren't crazy. They're doing the math on supply and demand and realizing the price has to go much higher to balance the market. And here's something else to consider. When commodities go into shortage, the price moves aren't linear. They're exponential. You don't go from $64 to $100 in a steady climb. You go from $64 to $75, then $75 to $90, then $90 to $120 in a matter of weeks. The last 20% of a commodity bull market often happens in 10% of the time. That's when the panic buying sets in. That's when industrial users will pay any price to secure supply. That's when investors FOMO in. Look at what happened with nickel in 2022. It went from $25,000 a ton to over $100,000 a ton in a matter of days because of a supply squeeze. Now, I'm not saying silver is going to quadruple overnight, but I am saying that once the market fully realizes the severity of this shortage, the price action is going to be violent to the upside. And the thing about silver is, it's a relatively small market. The entire above-ground silver market is worth maybe $1.5 trillion. That's nothing compared to the bond market or the stock market. If even a small percentage of institutional money decides to allocate to silver as an inflation hedge or a supply shortage play, it could overwhelm the available supply and send prices parabolic. We're already seeing signs of this. Silver ETFs are seeing inflows. Retail investors are buying physical silver at rates not seen since 2020. Coin dealers are reporting shortages of popular products. Premiums on physical silver over spot price are elevated. These are all signs that the physical market is tightening. And remember, most silver trading happens in the paper market. Futures contracts, options, ETFs that don't hold physical metal. But when push comes to shove, when industrial users need actual physical silver for manufacturing, they can't use a futures contract. They need the real thing. And that's when the paper market breaks down and the physical market takes over price discovery. We're watching that transition happen right now. The London market disruptions I mentioned earlier, that's the paper market starting to crack. The COMEX warehouse drawdowns, that's physical demand overwhelming paper supply. The widening spreads between futures and physical, that's the market telling you there's not enough real metal to go around. So what does all this mean for you? It means if you've been thinking about adding silver to your portfolio, now is the time. Not when it hits $80, not when it hits $100. Now, while you can still get it at $64 and while physical supply is still available at reasonable premiums. And I'm not just talking about paper silver. I'm talking about physical metal. Coins, bars, something you can hold in your hand. Because if this shortage plays out the way the fundamentals suggest, there's going to come a point where physical silver is hard to find at any price. We saw this in 2020 during the COVID panic. Dealers were sold out. Premiums went through the roof. Wait times were months long. And that was just a temporary disruption. This time, we're dealing with a structural shortage that's been building for 5 years and shows no signs of resolving. This time, the industrial users are competing with investors for supply. This time, the deficit is growing, not shrinking. The dynamics are completely different. I want you to imagine something. Imagine it's 6 months from now. Silver is trading at $95 an ounce. The mainstream media is running stories about the silver shortage. Your friends are talking about it. Everyone wants to buy. But physical silver is back-ordered for months. Premiums are 30% over spot. And you're thinking, I should have bought when it was $64. That's the scenario I'm trying to help you avoid, because I've been in this market long enough to know how these things play out. The opportunity is now. The fundamentals are clear. The technical setup is bullish. The supply situation is critical. And the price, despite being at multi-year highs, is still cheap relative to where it needs to go. This isn't about speculation. This isn't about trying to time the perfect entry. This is about recognizing a fundamental shift in a commodity market and positioning yourself before the crowd figures it out. The smart money is already moving. The central banks are already accumulating. The industrial users are already worried. The question is, are you going to wait until everyone else realizes what's happening? Or are you going to act now while the window is still open? Because I'm telling you, this window is closing. The supply deficit is real. The industrial demand is real. The investment demand is starting to accelerate. And once this train leaves the station, it's not coming back to pick up stragglers. Silver at $64 is going to look like an absolute gift 6 months from now when we're trading at $90 or $100 or higher. The data is clear. The trend is clear. The opportunity is clear. The only question is whether you're going to take action or watch from the sidelines. Don't be the person who looks back and says, I knew about the silver shortage, but I didn't do anything about it. Be the person who recognized the opportunity and positioned themselves before the mainstream caught on. The window to buy cheap silver is shutting, not slowly, rapidly. Every day that passes, more physical metal gets consumed by industry. Every day the deficit grows. Every day the price inches higher. And every day the opportunity to get in at these levels diminishes. So here's what I want you to do. Take a serious look at your portfolio. Ask yourself if you're adequately positioned for a commodity supercycle in silver. Ask yourself if you have enough exposure to hard assets in a world of currency debasement and money printing. Ask yourself if you're prepared for what happens when a critical industrial metal goes into severe shortage. And if the answer to any of those questions makes you uncomfortable, then you know what you need to do. The information is out there. The fundamentals are clear. The opportunity is now. Don't wait until silver is at $100 and everyone is talking about it. Don't wait until physical supply dries up and premiums explode. Don't wait until the window has completely shut. Act now while you still can. Because this opportunity, this setup, this perfect storm of supply deficits and industrial demand and monetary chaos doesn't come around often. And when it does, the people who recognize it early and take action are the ones who profit. The people who wait and hesitate and second guess are the ones who end up chasing prices higher and buying at the top. You've been warned. You've been shown the data. You've been given the analysis. The rest is up to you. But don't say nobody told you when silver is trading at $120 and you're wishing you'd bought at $64. The window is shutting. Don't wait.